Yeah, so I'm Courtney Shupert. I do regional economic research at the Oklahoma City branch of the Federal Reserve Bank of Kansas City. Prior to joining the bank, I studied economics at OU, so boomer sooner. I'll begin with a quick overview of the Fed and talk a little bit about monetary policy and kind of our functions and what we do. But certainly feel free to ask questions. All right. Okay, so the creation of the Fed. The first bank of the United States was created in 1791 by the famous guy on the left, Alexander Hamilton. So if you can sing all of Hamilton, maybe give a thumbs up in the chat. He was kind of the OG creator. He was the first Secretary of the Treasury, and in addition to the National Bank, there was a huge need to establish financial order at the beginning of the beginning of the creation of the federal government in the United States. And so the first Bank of the United States helped to resolve some issues with currency and just provide lots of order and clarity for the new country and for our presence internationally. However, there was just a 20-year charter for the first Bank of the United States, in part because a lot of folks from around the country said, oh, the first federal bank is just concentrated in the northeast part of the US, so it's not going to be representative of all of us, right? And so it had a lot of opposition and was just for 20 years. And then there was the second Bank of the United States, which ran again for a 20-year charter from 1816 to 1836. And that central bank was primarily used to help finance war debts from the War of 1812. And then there was this period, about 75 years, where there was no central bank for the US, which meant there was no bank of banks, right? So if a bank failed, all of those consumers were basically at a loss, right? And so during that time, there were numerous financial panics where people would try to go into a bank and withdraw all their money, and then the bank would fail because there weren't a ton of federal regulations around what banks could do regarding their lending policies. So finally, in 1913, the country realized that they needed a new Federal Reserve System, and so it was established and signed by President Woodrow Wilson. And in 1914, the Fed opened for business across 12 different cities. So the Federal Reserve System in a few slides, I'll show you a Federal Reserve district map so you can kind of see what that looks like. But first, I did want to highlight that Oklahoma has a special connection to the Federal Reserve System and specifically to its creation. Senator Robert L. Owen was one of the first senators for the state of Oklahoma after statehood in 1907. He was a bit of a jack of all trades. Robert L. Owen was a banker, teacher, newspaper editor, politician, attorney, in addition to being a senator. And he was a great Oklahoman. He was born in Virginia, but his mother was Cherokee. And so after his father passed away, they moved back to Indian Territory, where they were entitled to tribal property. And so it's been said that Robert L. Owen is a little bit like Oklahoma's Alexander Hamilton, because he designed us, the Federal Reserve, and the Third Central Bank. As mentioned, Woodrow Wilson signed the Federal Reserve Act into law, and Owen's plan worked because the Fed system has been serving the country for nearly 107 years now. So, and one of the other co-sponsors of the Federal Reserve Act was Carter Glass, which you may also have heard of him in talking about federal government and history. He was a co-sponsor also for the Glass-Steagall Act in 1933, which also helped to establish federal regulations for financial institutions. So the Federal Reserve structure, we have three main entities, and this is what makes this version of the US Central Bank unique. So we have a Board of Governors, which is the public side of the Federal Reserve System. It has 7 members who are political appointees. So these are people that are appointed by the president and then confirmed by the Senate. And they oversee the work and operations of the Federal Reserve System and report regularly to Congress. They testify before congressional committees and meet frequently with the President's Council of Economic Advisors. And they help formulate monetary policy through the FOMC, which is one of the other branches. And the chairman also meets regularly with the president and the secretary of the Treasury. So if you know the current chair of the board of directors, feel free to drop him in the chat. Currently a him, so that's a hint. And then we have the regional banks. So I'm employed by the Federal Reserve Bank of Kansas City, which is technically the 10th district. So that comprises Oklahoma, it's the beige section kind of in the middle of the map you see. So that includes Oklahoma City, Kansas City, Omaha, and Denver. So those are our branch offices, and then Kansas City is obviously our main office. So we have 7 states that we cover. You can see we don't exactly follow state lines, in part because when the Federal Reserve was created in 1913, it followed like economic industry lines more than it did state lines and state boundaries at the time. So, and then, and so the bank side is the private side, the regional banks. Each one is structured like a corporation with its own board of directors and president and CEO. So there's 12 banks, 25 branches, which are the smaller dots, and we supervise member banks. We operate payment systems, so processing cash and checks, and then also serve as a banker for the US Treasury. So does anyone know what the FOMC stands for? If you want to unmute yourself and chime in, feel free.
Federal Open Market Committee?
Yes, that's correct. Way to go. So the Federal Open Market Committee, or FOMC as it's commonly abbreviated, is the group that brings both sides together. So they bring the Board of Governors, the public side, in with the private side of the regional banks. And they comprise this 19-member committee. That's the picture you see is the table for the FOMC. So there's 19 members, but only 12 vote at a time. So the Board of Governors, the public side always votes, and then the other votes rotate between regional bank presidents. So the FOMC is the group that votes on interest rates. So they're commonly in the news for the decisions that they make. And so the FOMC minutes are publicly published, and they also release forecasts for what they think interest rates will be in the future, what they view unemployment will be like over the next few years, things like that. And so we'll get to some of their projections towards the end of the presentation. So the Fed is independent within the government. And this is something that not everyone knows about the Fed, but is kind of part of the Fed's unique structure. So we were created by an act of Congress, and we do report to Congress, but the Federal Reserve System does not receive any money from the federal budget. We are self-funded through the open market operations, and through providing services to financial institutions. So open market operations include the buying and selling of US Treasury bonds. And so all of our earnings above operations are returned to the US Treasury. So you can see in the chart on the right how much money this is, and this is in billions of dollars. So the operations costs for all 12 district banks are typically like less than $5 billion. And this is, at least for the Kansas City Fed, we have over 2,000 employees. So for each district, it's kind of a huge operation, but by and large, the vast majority of the money that the Fed makes goes back to the US Treasury.
I didn't know that y'all did not receive any money from the federal budget. I found that interesting. So
yeah, it's a common kind of misconception, I think, because a lot of people say, oh, the Fed's funded by taxpayer dollars, and it's like, well, actually that's not what's paying my salary.
It gives you an incentive to, like, I mean, you have to make money.
Yeah, but you know, I think part of the beauty of this structure too is that, you know, when you're reliant on federal funds, it means that whenever the government shuts down, you could shut down, but that's not really an option for banks and for the economy at large, right? So, so if the government shuts down, the economy has to keep going and the Fed has to keep going. So it's kind of a
great way to keep politics out of the banking system in that sense.
Yes, exactly. And the Federal Reserve System has lots of checks and balances similar to the U.S. government, and that's part of how we're structured with the Board of Governors and the bank presidents and everything. All the terms are kind of staggered. So even the Board of Governors, which are appointed by the president and confirmed by the Senate, those are 14-year terms. So by and large, the Fed, you know, is very apolitical in the sense that they work with people from both sides. So kind of a unique structure. So the three main areas and functions of the Federal Reserve are monetary policy, bank supervision and regulation, and then our payment systems, right? And so for monetary policy, Congress, through an act in 1977, gave us a mission to have full employment or maintain maximum employment as much as possible, in addition to stable prices, right? So the idea that if you are going to purchase groceries or gas or a home, that in general, those prices aren't going to fluctuate a ton from year to year, because that's something, that kind of instability makes society really difficult. And that's something, runaway inflation is something you see in countries after war or in times of severe crisis. And so maintaining safety, soundness, and stability is mainly what the Federal Reserve does. We also serve as one of three regulators for banks. So other regulators for banks could be the FDIC or the Office of the Comptroller of the Currency. And this just ensures that banks, no matter the regulator, are compliant with federal regulations. So, and those have also changed throughout the years. So in the 1970s, the Community Reinvestment Act was instituted, which basically made federal regulators make sure that banks weren't doing redlining or doing lending based on zip code or on any discriminatory practices on the basis of race or location. So some of those regulations do change over time, hopefully to become more fair and equitable to people everywhere. So, and then payments, it's just making sure that checks are going through. And the payment system is something that the Federal Reserve does on behalf of the Treasury. So the Federal Reserve helps process treasury payments, including your tax returns. And also if you received a $1,200 check earlier this year, that was something that was done through the payment system in the Federal Reserve. Okay, so then the 10th district, and we'll go through the next slides pretty quickly, but this is our 7-state region. So when we talk about doing regional economic research, these are the states that I study and that I look at frequently. Our bank president for Kansas City is Esther George. So she serves on the Federal Open Market Committee, and her vote rotates with Minneapolis and the San Francisco Feds. So she was a voting member last year, and she'll also have the opportunity to vote again in 2022. Regardless of whether she's a voting member or not, all bank presidents have the opportunity to have their voice heard at the table, which is really important. So she typically says that her role doesn't change a ton whether she's voting or not. It's just whether she raises her hand at the end or doesn't. So, and then the Oklahoma City branch. So our branch actually started in 1920, so a few years after the Federal Reserve System was created. There was kind of a competition between Wichita, Tulsa, and Oklahoma City to see which city would get a branch location. But Oklahoma City won out. So our old building was located on Dean A. McGee, or 3rd and Harvey, basically. This is a picture of it. And they had a huge vault and everything for all the cash operations. It's kind of a fun history. And again, yeah, we're celebrating our branch centennial this year for 2020. So our functions have evolved with the nation and state's economy and financial system, but we do remain Oklahoma's connection to the nation's central bank. Our website's on here if you want more information too, but our functions and purposes for our 50 staff include research. We have a special focus on surveys. So we look at the energy sector, manufacturing, and general business services as well. So we also serve as examiners for Oklahoma's financial institutions, including 45 banks and 175 holding companies. We do risk analysis and IT development for bank exams, and assist other Fed offices with those. And we also have community development programming for low and moderate income groups, and specifically workforce development. And then our public affairs department and also regional affairs works to do economic education and public outreach programming, kind of like we're doing today. All right, so now on to the FOMC projections. So in November, the Federal Open Markets Committee said that the ongoing public health crisis will continue to weigh on employment in the near term. And that's something that we've been able to see this year. Back in March and April, there were huge, kind of horrific layoffs and furloughs, and many people became unemployed. Maybe you were in that number, maybe your family members or friends were in that number. However, since that time, we've seen that unemployment has come down, but the current FOMC projections are that it will take several years for the US unemployment rate to decrease and for more people to find jobs. Obviously, you know, there's been a huge bounce back in some sectors, but some sectors will maybe continue to struggle, especially with travel and tourism having been down so much this year. So weaker demand and earlier declines in oil prices have been holding down consumer price inflation. So inflation is kind of the value of money, right? And so when we measure inflation, you can use CPI or PCE. Those are common measures. If you're taking economics, you may have learned about some of them. And so that just basically measures how the same basket of goods, how much it costs over time. And specifically because of lower travel, in addition to higher production of oil and gas, energy prices have been really low this year, which has hurt a lot of businesses in our region. But on the flip side, it's been really great for us when we go and fill up with gas at the pump, right? It's been a little bit cheaper to get gas. And so we think the long-term projection for inflation is 2% from the Fed. And so we do think it'll take a few years to get back to that 2% level.
And just to let you all know, oil and gas is crucial to our state economy as well. So I just posted a link from our state treasurer if you're interested in looking at it from the state angle as well.
Thanks, Eric. All right, and then finally, the FOMC decided to maintain their target range until maximum employment and inflation are on track. And again, employment and inflation are kind of the dual mandate that the Federal Reserve has from Congress. And so interest rates that are set by the FOMC are the overnight rates for banks. So the Federal Reserve Bank doesn't lend directly to consumers, but they do lend to banks, right? And so having lower interest rates for banks allows banks to have lower interest rates for consumers, right? So if you're in the market to buy a home, mortgage rates have been really low. If your family has a home, your parents may have been able to refinance recently to get a lower interest rate, which means it's basically cheaper for consumers to pay back a loan, because the lifetime of that loan, over the lifetime of that loan, the cost will be less. So that's most of what I had. Oh, one more slide. Sorry, I forgot about this one. So the FOMC will increase its holdings to sustain the flow of credit to households and businesses. So this is basically how many treasury securities, other assets, agency debt, and targeted lending programs the Federal Reserve has. And you can see that in 2008 and 2009, quantitative easing kind of took off. And so the Federal Reserve System significantly increased the balance sheet following that. And then actually in 2018, 2019, some of those assets began to roll off. They just weren't renewed. So that decreased the balance sheet slightly. But then obviously 2020 has been a very difficult year for the economy. And so Federal Reserve balances have increased significantly to about $7 trillion. So that's kind of where we're at. But the Federal Reserve the FOMC has said publicly that they will continue to increase holdings, again, to keep the flow of credit going to households and businesses. So if you guys have any questions, feel free to check out our website or ask me now.
Perfect. Anybody have any questions? I know Megan down there does. She has an interest in financial stuff. Her uncle is the state treasurer, so.
Nice.
Anything, Megan? Do you hear a lot about this at family dinners?
I do kind of hear a lot about this, sort of. I'm also just I'm not great with numbers, so I will not be taking that job, but it's interesting to hear about. I don't have any questions, though. Thank you for talking to us, though.
Yeah, absolutely.
So what's like a normal day? Are you poring over data sheets, or like what does the job entail for you?
Yes, absolutely. So life doing economic research means that I spend a lot of time looking at the news to see kind of how regional trends are going, and to see what real businesses are saying, right? Especially in a time of economic crisis like a pandemic, official data for unemployment and and data from like the BLS or the Census Bureau, it's going to be lagged, right? And so sometimes having conversations with businesses and also taking surveys of businesses is like the best way to get an accurate picture of what's going on, or at least certainly in a kind of a real-time view. So we conduct monthly and quarterly surveys. And so on any given day, I might be helping prepare questions for upcoming surveys so we can ask them, how have increased unemployment insurance benefits affected how you hire people, right? Things like that. So we ask very real questions all the time. We publish our reports. So if you're curious what the answers to that kind of stuff looks like, feel free to check out our website. And then also, so we prepare presentations for the public to say, hey, this is what the Fed is doing, this is what we're projecting, but also to ask them questions about what we need to know about the economy. And then we also do kind of internal things. So we try to brief our bank president, Esther George, before she goes into FOMC meetings so that she has a really good and kind of accurate picture of the economy at any given time. So, so lots of time with data. I work in Excel a lot. I work in Stata and R. Lots of high frequency data has really been important this year. So even just thinking about like Google mobility data, are people staying at home? Are they going into their workplace? What are their credit? What about like consumer spending? Are people spending more or less? And what on? So we know from this year, people are spending more on groceries, but maybe less eating out, right? Because you have to eat, but maybe you're just not going and sitting down at a restaurant all the time.
Yeah, interesting talking about that cell phone data because, you know, everybody has their location on their cell phone. The city of Edmond has been buying data to see the location of its citizens in order to see consumer behavior during this pandemic to see if sales tax will be affected or not, just by the number of people walking into a store. Cool stuff.
Yeah, absolutely.
Any other questions? One final one, if nobody else does. You talked about internships earlier. What's the importance of that for these students who will one day have to get a job?
Yeah, internships are great. In my experience, I certainly found it was helpful to kind of clarify what I wanted to do with my career. I will say the Fed does offer internships. Most of the time it's to rising seniors. We typically do our recruitment process in the fall, but we have a presence at fall and spring career fairs. It doesn't have to be, you don't have to be just interested in economic research if you want to work for the Fed. We have lots of positions, including IT, bank examinations, as well as public affairs. So if you're interested in that stuff, we'd love to have you check us out. Again, go to our website, and we do try to be at every career fair. It may not be me, it might be other people, but yeah, we love to encourage people to apply. So.
Well, perfect. Let's give Courtney a Zoom round of applause, and thank you so much for coming in today, Courtney.
Absolutely. Thank you for having me.